To Bob Pisani this morning. Hey, Bob.
Good morning, guys. Happy Monday. Important thing here is we're struggling to get into positive territory, but a lot of sectors hit new highs here. Consumer discretionary hit new highs. Tech sector hit new highs this morning. Even real estate investment trusts also at new highs. Banks still struggling. Very typical for banks to falter going into earnings season, and that is following a very predictable pattern right now. Keep an eye on that. I know there's a lot of talk about China regulatory crackdown on the tech sector. I just want to point out the Shenzhen Index, which is the main index for at-home tech stocks in China, just hit a new high today, the highest level since 2015, which was the all-time high, essentially. So I know there's concerns, but the in-home stocks in China are doing very well. Not so great for the stocks, Chinese stocks listed outside the United States. I mean, they've just had a very rough month overall. If you just look at Alibaba, that was a 52-week low on Friday. Tencent was a new low. Baidu, I believe, was a low for the year. That's 178. I think that was probably a low for the 2021, maybe not a 52-week low, but you get the point. Who would have thought regulatory or where you're listing risk would be an issue? Certainly nobody thought about that 5 or 6 or 7 years ago. As for the major indices, well, you see where we're at here. We're essentially, let's not quibble about a few points. We're at new highs. Small caps, have you noticed here, have been range bound for a while now. The cyclicals are still under pressure. It was really a growth period for June and most of July. I'd say breadth is kind of on the sluggish side. A lot of big tech stocks helped move the market in June and July. Earnings, folks, I'm saying there's big expectations here. I mean, overly aggressive whisper numbers are going to be a problem. They're going to be a headwind for stocks. They are titanic whisper numbers for the S&P 500, and I think that's going to be an issue. I'll talk more about that tomorrow. As for the bank earnings, well, good and bad news. You know, you got the stress tests that are positive. That's going to be good for dividends and capital returns. Credit's been good. I haven't seen any surge in defaults going on. Net interest income is a problem. It's been under pressure, and it's been under pressure for a long time by lower rates. Loan demand, good. Autos and housing are strong. Credit cards seem kind of flattish to me. We'll see what's going on. The important thing is the multiples here. For the last several years, bank multiples have been trending downward because of the interest rates. So we're looking at 10 or 12 times forward earnings. Remember, the S&P is 20. And so S&P multiples going up. Bank multiples have generally been going down, and that's been a problem overall for the bank stock. That's why, of course, they're value stocks that we see here. Meantime, keep an eye on the banks overall. Look at the KBE, by the way. You see what's going on here. The KBE has been dramatically better because the interest rates in February went up. So bank stocks went up. That's why they've been outperforming. But all the outperformance was in February. Finally, Carl, just want to note, more people coming back on the floor of the New York Stock Exchange. The vaccination rate's above 70%. The NYSE has dictated that they can remove the restrictions. There were headcount restrictions on how many people could come down on the floor based on the firms. They're removing that as of today. Unvaccinated individuals still have to wear masks on the floor. So, Carl, the NYSE is very emblematic of what's going on in the rest of the country. They're struggling to figure out what's the balance. So they're requiring proof of vaccination, but they're asking for it, but they're not requiring it as a condition of being on the floor. If you don't have vaccination, obviously you have to continue to still wear a mask. And as I said, Carl, this is very typical of the struggle that a lot of companies are having around the country, figuring out what's the balance to get people back in here. But I do see more people on the floor today. Carl?
Shepard Smith here. Thanks for watching CNBC on YouTube.